sweeps as well.
We
But
checked
obviously
out.
because it's so bearish, so
Yeah,
like
this year. I see what you're
that
saying.
that that 15-minute order block, yeah,
Yep.
that might be somewhere that I would look for a buy. But obviously because the whole higher time frame bias is just so bearish, like
Yeah, I think that's the biggest thing when using that intraday strategy. The bias is, I always used to say it, but literally like 80% of that plan is understanding where your higher time frame liquidity is expected to be met. And then for me, seeing something like a great liquidity sweep like this, and then even this basic fair value gap down. This is basic. I mean, in a nutshell, this is like what ICT does. Obviously, he has his ridiculously complex topics that he uses, but in a nutshell, he looks for that liquidity purge, a basic, very small market structure shift, and then enters off the fair value, which is kind of what, essentially I was looking at here. Obviously, I use order blocks, and I'm more of a cover my protected high. ICT would be like covering something like this. I'm not that intricate with his concepts, but overall, for me, if I'm in a bearish trend, I expect this target to be met. Seeing that liquidity purge and seeing a fair value gap formed bearishly after it, it's kind of, a good enough entry setup from stuff I've seen. Same with the AU one, which is basically identical to how we trade. If you want to slap a 75 fib on there, take shorts, and take shorts intraday like that. That's another thing that could work. The biggest thing for intraday with me was I would be a lot more aggressive with it because I would rely a lot heavier on my higher time frame bias. That was like a huge part of it, is understanding like if I'm really confident in my higher time frame, I can go and take more aggressive entries like this to try and, couple with that higher time frame probability. Because otherwise, if I was too conservative, for example, and wanted to wait for a big old break of structure like this, the odds of price coming back in within my session to tap me in and run is just so unlikely.
and are you still for the intraday, you still telling people to do like the higher time frame with it's a 3-to-1 risk to reward, or is it like because obviously back in the day we'd just do the size of the order block, so sometimes you could have like a 6 hour trade or
Yeah, I
etc.
mean, I personally I did shift to three risk to reward fixed. Towards the end of using this strategy. I honestly feel like either one is fine. If you don't use three risk reward fixed, I always recommend utilizing some form of liquidity target. Just because I feel like in general having a liquidity target is an analytical reason to close a trade, so I think it's fine. But also 3R, in my opinion, the simplicity of it is kind of what I liked. Just because there's no ifs, ands, or buts. Like if I was, at one point, let's say this turned around right here and ran, I can't be like, oh, I should have targeted this liquidity here at 2.5R, or oh, I could have targeted this. It's just very simple and fixed 3R. That's what I used to use, and that's probably if I did go back to day trading, it would be the same thing probably. Similar here, obviously, but this is kind of a example with a fib. Even EU is another example today where, it's one of those things, being able to understand correlation as well. Like I would use correlation a little bit more on day trading, but it would throw you off if you overuse it. Because for example, many people might view this as a break of structure. Many people might view EU as very bullish, but realistically speaking, instead of a break of structure, price just worked its way up towards, I would assume, yeah, this is yesterday's high of New York session. Grabbed all the orders within that area, and then obviously are more likely than not going to go and deliver to the liquidity at the lows here. So day trading, I think definitely from an analytical standpoint, it was much more difficult because there's so many more variables to it. But I feel like it leveraged my experience in the markets a little bit more. Like I had a lot more experience with good higher time frame analysis and like a lot more uh, just strengthen my concepts and reading a chart. So it leveraged that a lot more, which is probably why my win rate and even yours could be higher compared to swing trading. But I personally think at this stage of where I'm at, I think swing trading, the simplicity of it is honestly what I favor, just because it's so much more simple. It's something that I can kind of do a lot more passively, hop on, look for my orders, walk away, which is a nice aspect to it, and definitely why I prefer it.
I think the other thing that I really liked about it as well is it's something that it really helped, like made me focus on my psychology a lot more because you're taking like
Definitely.
it's a lot quicker, and now I feel like just with swing trading, my psychology is so much better because it's just relaxed. Like
Yeah, that's another big part of it. Swing trading, I almost have no psychological effect on it compared to even the day trading strategy that we have here is not something that I think is psychologically heavy compared to One of my most difficult strategies I've ever used was that 1 minute strategy, but it's because the patience was the biggest one for me. I would have to sit. I was very, very picky with trades. I traded that strategy for like 2 years. So I had to get really, really picky to make it even have an edge. And that pickiness was so much discretion, so much patience. Like I would hop on a chart for a whole week sometimes and see no setups. I would hop on another week and see five. And, it became very, very difficult from not only a discretionary standpoint, but psychologically, it was super, super hard to maintain. But I think it was mostly because I would just leverage that discretion to help the psychological side of it compared to swing trading where, I kind of just hop on, I see my setups and I enter versus, doing anything too complex. Very little discretion I use. All right, I wanted to probably do a little bit of higher time frame analysis here on just I don't know if I'll go through all pairs. Um, Maybe I could go through like one of each major currency, but only because I just don't know if I'll have time to do a bunch. Never go, yeah, psychology, yeah, I would agree big time for most new traders as well. Being able to switch to I don't know what streamer mode is. Being able to switch to swing trading is super helpful because as a new trader, you can't rely on discretion and you can't rely on psychology. Like it's just a skill that hasn't been built yet. So it's so much easier for a new trader to come in and try to take on a mechanical, swing trading strategy than it would be for a new trader to come in and try to start killing the charts on the 1 minute, 15-minute time frame. Let's do
Right, yeah, I've
some.
got to shoot and pack, but it was nice to catch up, mate. Have a good
All right.
session.
Yeah, you too. See you. Enjoy the holiday.
Will do, bro, in a bit.
All right, so I figured I could do some top-down analysis on EU, GU, maybe just some of my major. Actually, let's go over here to intraday. Maybe I'll even throw. Let's see what I'll do. Maybe I'll throw gold in there, silver. I mean, I could do Bitcoin. Bitcoin's going to be very, very bullish right now, regardless. Maybe ETH. We'll just do some top downs, just to kind of go through. It's a refresher on different concepts and stuff. If you guys have any trade setups you'd like me to look at, feel free to send them in chat. Um, any setups that you want to take, any setups that you did take, or just pairs you want me to look at if you want to top down. Um, but the other thing I'm going to do is I'm going to go through a. Actually, let me grab it right here. Got a request to look over some data, so we can do that as well towards the end of it. So let me get going here on. We'll start with pound US dollar. I actually think I did my higher time frame analysis on this in a video, so maybe I will go and delete the drawings and redo that analysis here. So for some of you that haven't seen, I actually did years and years ago when I originally made my first course content for another mentoring server, an old one that I used to have. I had this analysis here where I had a break of structure that occurred, like so. I had a general supply zone that I expected pound US dollar to make its way up into. We'll delete that. And then I had this general range we were working within, and my expectation was that over time, I believe it was a 2 year period, I did expect price to work its way. Where were we? Right about here, I believe, when I made that original analysis. I had all of this internal liquidity here, meaning that this is a very strong high. I expected price to work its way up into that supply zone, fill that area, and then make a bearish move. And then that did actually end up playing out with time. Let me skip here. So we did tap into that supply. We took the overall low. Now, one thing about pound US dollar on the way, way higher time frame that I have been looking at is purging this massive low in the markets. And this is super, super important. You could see how much volume there was in and out of that area. But when there's a low like this with significant, we're looking at 1985. There are a lot of hedge funds and institutions that may have, bullish expectations on pound US dollar, and they will have stop losses or a lot of capital resting below certain points in the market like this. So you can see when we do purge an area like that, how much volume there is in this monthly candle. And especially, I talk about it a lot, but large wicks like this are very, very clear examples of volume in the markets. So I did see that purge on that very bullish move. And my expectation now is to actually come and run some of these target highs up here. only because we're kind of looking at what would be considered Wyckoff in a sense, where we have these intermediary lows. We have, your sign of strength here, if blah, 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 a bunch of Wyckoff garbage. But regardless, the baseline of Wyckoff is an impulsive purge on liquidity, large amount of orders met in what would be called the spring, and then price is going to be drawn to other areas of liquidity in the markets, and more likely than not, very bullish in this case. So I am bullish on pound US dollar. I actually did some analysis where not only is that my expected target, but we did just purge a very strong high in the markets. And we did come in contact with, some general supply here. So my expectation was price would tap in, make some form of retracement either into this area or this area. We could even see it come significantly lower, but my overall expectation for the time being is to stay within this general range here. So we can go to a lower time frame and take a look at that. So now after this liquidity was run, it's also a break of structure to the upside. I expected these lows to go, so this low here and this low, because neither of these swept liquidity. This one's a bit more impulsive, but no liquidity was swept. This one's very low volume. So the only order, or the only low here that I see is a strong low is going to be this one here, and that is because of how much liquidity it swept. So very similar to our 4-hour strategy, we have a consolidation area here, and then that consolidation is run, all the orders are grabbed, and then a very bullish move to the upside. So we can mark a break of structure here if we want as well. And then for those of you obviously familiar with the 4-hour strategy, something like this I think would be a perfectly viable position. This is obviously much, much higher time frame, but I'm just showing you the relation to how we trade on that lower time frame. But I do expect some form of demand to come into play here, where this very impulsive, technically speaking, this high to this low is that whole move of bearish movement that swept liquidity. So I do expect price to work its way in here. Maybe we could see it slow down and then work its way to overall this target high here at the top of the range, like so. So I am very bullish on pound US dollar until I see some signs of number one, I want this liquidity point to go. But number two, I want to see some form of, doesn't have to be accumulation, but I want to see volume begin to slow down. It's very, very aggressive at the moment. So if we do see price start, slowing down, making intermediary lows, and then breaking up, this is where most of us might find ourselves having a long position on that 4-hour time frame. And then obviously towards this target high would be my expectation. I don't often use higher time frame bias in my analysis, but I do think sometimes it's good to just kind of get an understanding of where you are overall in price. So I will expect some form of bearish movement, especially because at the moment right now on pound US dollar, I have almost no setups at all. Last week we had a good few setups in a row that did play out. I had this one here personally, so I kind of just followed a lot of this range down, but I had this set up here where it was 3 risk to reward. Let me mark that up. So this was the first setup I took just because we have this high here, we have this low here, and this is kind of the range we're working with. A break of structure occurred here, and then liquidity run here. So this is the first range I had. It was 3 risk to reward, and then I actually did take second range here right in a row, which I typically don't find myself doing, but there was a lot of time of consolidation between it, and I did end up taking a 3R on this one as well, right here. Oops, sorry, my charts are all marked up messy right now. And then I actually did go and take a third position, which was a loss in this case because this high invalidated the overall high here. So I took the 2 wins, the loss, and then I avoided this final range, which actually was another winning position from the high to the low, simply because, in my opinion, that break of structure was not strong enough. Just a little baby wick below it wasn't convincing enough for me, but I did see someone who sent me some analysis in DMs of this trade as well. So pound US dollar had the opportunity for roughly 3 winners, depending on how, discretionary you might want to be with it. I do prefer bigger breaks of structure than this, but there was someone in my DMs who ended up catching all 3 of these and then taking that loss as well. But simply just kind of following price action all the way down through these ranges like so. All the way down. And then eventually now we're very, very bearish, working our way into this zone. So not much going on in pound US dollar, in my opinion. But I will keep an eye on it over the next week or so, because if I do see some sort of bullish shifts, I think some buy plays could be setting up in the longer term. Make sure there's no questions in chat. Watching film in class. All right, so AUD USD. Let's delete the lower time frame analysis here. I do think there's a pretty solid setup at the moment on AUD USD. So I actually avoided a buy setup that I mentioned, this one here, because I wanted to see more price above this high to show a more convincing shift, especially, we're in such a heavy bearish trend. I wanted to see some stronger break of structure above this. So if price did break it and then, stayed above it for a little while, I would have been comfortable taking that long. But obviously we kind of just barely grabbed above it and then very aggressively moved right back into the range. So for me, I do see that as a liquidity sweep now. And then if price has any signs of wanting to come back up to this high, I would be willing to take a bearish setup like so. I'll mark it up. So that is something that I would be interested in if price started making its way back up. I mean, at this point, if it keeps trailing down with this very, very low and ugly volume, I don't think it's the best of setups. But I do think we can probably make our way down on a higher time frame, and I have something similar on EU as well. But once again, EU is a pair that kind of just started working down more and more, so I actually invalidated this one. But I did really like this setup that I had here, but it was a miss overall, and then price kept running. Let's go to my watch list here. You guys saw CAD JPY this week. I don't trade CAD JPY, so I was not in this position, but we have a great sweep on liquidity here for some consolidation, very impulsive move through it in a break of structure, fair value gap, and then price worked its way right back in, tapped in, and 3 risk to reward. Lots of people in the server got to catch this one. And then USD JPY is another one. Tons of people in the server caught this week, where we just have a significant low here. Price grabs that liquidity low, and then we break structure, leaving a fair value gap. And then this is the range we are working within here. So adding that 75 fib, tapped in. The people that did get tapped in, I know they left a little bit of room based on that spreadsheet sheet that I have in chat. But another great trade, another 3 risk to reward here. So 6 total just between those two positions, which is really, really nice. Both of those are super clean setups. I don't see too much on other pairs. Do you guys have any orders that you are looking at the moment? I'm going to take a drink of water while I have a second. Euro pound sell. Let's check that out. Definitely a bit of a larger range, but I do like it as well. It's similar to AU, where there's a very clear liquidity sweep here. We've reached right above this high, and then we have this high overall to this low here. Break a structure down. It is a pretty large range, I will say. It could take a little while for this to play out. But overall, I think it's a pretty solid setup. Plenty of fair value gaps. I won't even mark them up, but this low to this high. One thing I will say, the break is slightly weak here. It's similar to AU, and why I avoided it was we just had a relatively weak break. But overall, I think that's a pretty solid setup, and it could just take a little while for price to come work its way back up in there. Keep that one. I don't see too much else. A lot of these pairs like this, just very ugly volume. Not too much piquing my interest. Yeah, this is a very, very... I wouldn't touch pound CAD until we're out of this range as well. That is something we're probably going to go over a little bit in a few minutes when I go over some student data, because he does have a lot of setups that I feel he could have avoided based on consolidation. So we're going to talk a little bit about that. We already looked at pound US dollar, of course. Yeah, this is very, very rough. I am definitely staying out of a lot of these pairs. Volume has been terrible on some of these pairs lately, so this is one of those things. Very clearly, if I can look at a chart and it looks like a barcode, just the best thing you can do for yourself is avoid it. I see so many people destroy their win rates by attempting to take a bunch of different trades inside of these ranges. It just hurts more than helps, in my opinion. Nothing too significant here either. Been a slow few weeks for me. This was a setup I had sent into me on pound AUD. Doesn't look like price is working its way up there, but as you can see, very, very impulsive sweep on liquidity here. Break of structure to the downside. We have a fair value gap right here. Can't mark up. Fair value gap. Didn't end up getting filled in this case. But, you know, we have this very, very large wick. Price could still work its way up, grabbing these as internal liquidity or inducement and working its way down to that overall low. You can see on the higher time frame as well. One thing I did like about this setup when someone sent it was we grabbed this general area of liquidity here. So in my opinion, a lot of these liquidity lows are what's more likely to go now. Because there's a lot of orders resting at these levels. We can expect price to maybe work its way up and then try to target those areas. So that is a decent setup as well. I'll keep an eye on that for this week. I don't have much going on this week, to be honest. Pretty slow overall for me. Let's go. Stuff like this, I tend to avoid just because I don't like the volume here. There is a fair value gap, but the low of this is just very low and slow volume. But for those of you that want to consider that a sweep, it's fine. But the other issue, because I have had this trade sent to me as well in my DMs earlier today, like so. Actually, let me mark it up properly so I can explain to you guys why I personally don't like it. Or if you guys want to type in chat while I'm marking it up why you don't think I would take it, or any reasons why you might avoid it, let me know. But I have a sweep here. We have a low and a high. So this was the general setup that was sent to me. Let me move my Discord to my other screen too so I can keep up with it. I'm actually interested in looking at some of those setups Sagar just sent because I don't look too much at indices, but they do look like some great setups overall. Honestly, all three of those look pretty solid to me. So actually, I'll pull my Discord back over here just so the recording can see it. We'll check out Pound CAD in a minute. I'm not sure if I already looked over it when I was browsing through. This setup I really, really like here. I love the impulsiveness of this liquidity sweep right above this high. You know, you have an EMA on here too. I'm assuming that's maybe something that you use for bias. I think it definitely looks bearish in that case as well, because we're below it. And then you have a great fib level here right above a fair value gap. Very, very clear and strong one. So I think this is like a picture perfect setup in my opinion for indices here. This one as well, bit of a larger range, but I have noticed with this strategy on indices, it tends to be ranges more similar to that one and ones like these that do work out. But this one as well, I love the sweep here. So we have a consolidation period for a very long time and a very strong low put in place here. And I like how price works its way down below it. And then super aggressively, we see price driven higher. And plenty of fair value gap you have marked out here. Am I able to pull up? Let's see. Oops. Not compare. US 500. So if you do go to a little bit of a higher time frame, like the daily here, this is as picture perfect as a setup gets. We have the general lows and highs that we talk about, these consolidation areas. Tons of liquidity below that area, and you can see how impulsive this bearish move to grab that liquidity was, and then how aggressive that break of structure to the upside is as well. So I do think for a longer term play, that's perfect setup from the low here to the high here. I'm just going to mark it out, keep an eye on it too, but plenty of fair value gap too, right around that entry level. So that is a great setup in my opinion. The other one looks good as well. We briefly went over it, but I like how much consolidation there is here. The sweep on liquidity and then that very aggressive break up. It's a bit of a larger range, but once again, if you're using this EMA for bias, we're above it. So expecting some bullish price here once price reaches below it. So I think these are all pretty good setups. Tons of liquidity resting below. Is that referring to the one I was looking at before, which I can't? Let me check the pound CAD one for you. Oh, okay. So I did see this setup. Me personally, it's very aggressive. I'm not one to take these types of ranges, but I do think if this is something you're comfortable taking, I think it's a great setup because we just grabbed that very strong liquidity point here, and then we have that break of structure to the upside. Fair value gap as well here. So I think it's a fine trade to take. It's definitely a little more aggressive than my preference. I don't usually take trades this small of a range, but it does look pretty good to me. So one like that. And then yes, it's daily EMA, planning on limits, will place limit, split risk. When you say split risk, you mean amongst the three? Is it because they're correlated or anything? Or what do you mean by split risk? And then I can't remember what setup I was looking at now. Oh, this one here. So this is the one where, in my opinion, he's mark it out. It's similar to the one you just mentioned on pound CAD, but my biggest issue with this trade when someone sent it to me is I've talked about it before, but considering this a sweep on liquidity is perfectly fine. We've seen tons of setups like it, but I think being aware of what's going on here is more important. Understanding that, from that higher time frame perspective, we have what many would consider a perfect support level, all at this low. Tons of orders are going to be resting here, so more likely than not, price could work its way up and then come and target that liquidity overall. I never like having my stop loss at an area where there's tons of higher time frame lows resting, because as we know, that's liquidity, and more likely than not, price could work its way down through that. Especially when you zoom out like this, a lot of people do view charts in this sense. There's tons of orders that or stop losses that get placed below significant lows in the market like this. So I do expect price to come and make its way towards that area in the near future. Don't see too much on any other pairs. Let me make sure. Gotcha. Yep. Yeah, makes sense. Especially because they're all or two of them are U.S. indices. I definitely correlation is something I do find in the stock market a little bit stronger than foreign exchange. So I do think that is smart. Man, this is pathetic price action here. Once again, another pair I would completely avoid, and really just try to pay attention to these ranges. I see a lot of people destroying their edge utilizing ranges like this. Don't see too much else for orders. Terrible volume. This one's not bad if I saw some more aggressive breaks to the downside. AUD USD. We already talked about this setup, but on a different data feed. This one here. This is not a bad setup either. Nice sweep on liquidity, breakdown, NZD CAD. Definitely not touching this pair. NZD USD, very similar to AUD USD here. And that about concludes most of my pairs. And what I do want to do is go over this here. So Marco submit his data to me. He had fantastic data. We actually went over this in last week's webinar. Fantastic data in his previous year. He did a great job with it. Solid win rate, great amount of trades, 19 wins, 27 break evens, and 29 losses. So I think he did a great job here. He focused on clear structure, larger FVGs, and only liquidity sweeps. There wasn't too much when I went through his trades here that kind of stood out to me. I think they all looked pretty solid. One of my main critiques I mentioned was a little bit stronger liquidity sweeps in cases like this, where it's actually similar to what we just talked about, but you might consider it a liquidity sweep, but when you do zoom out in the grand scheme of things, it's a very weak sweep, and you could expect price to kind of drive towards that area to take out relative equal highs like this. some of the ranges as well, I do remember mentioning, were a bit on the smaller side. But overall, I think the losses and wins, and especially, obviously how the data panned out here was fantastic. He had an issue where he went to test the next year now. We don't have his data or equity curve here, which I would kind of be curious to look at. I think one of the key things to keep in mind is he's had about the same amount of trades. It's very normal to have 1 year with 75 and then 1 year with 65. If he had, say, 25 or 105, I would be a lot more concerned about that. So, aggression wise, I think he was pretty similar in the same boat of this testing here. Obviously, data wise, very different. So, I do want to kind of dive into that. Um, he said, not sure what happened compared to my previous results. Satisfied because he believes he stuck to the plan, but wondering how the RR and win rate is so different from the previous year. And then he mentioned a 15 trade losing streak, which is huge. I will say I have not myself experienced 15 in a row. Um, so he mentions, are my liquidity sweeps too weak? And all of my winners had super obvious liquidity sweeps. So one thing I will say is if he is able to, especially with this much backtesting, conclude something like this, more cases than not, you are the better person for this than I will be. Obviously, I'm going to look through his trades. I have kind of briefly brushed through them, and I will say he's on the same track that I was. This first thing I noticed was liquidity sweeps could be a little bit more substantial. And let me just make sure I'm not missing any questions here. Oh, my poll completed for the other day. So his liquidity sweeps, I did mention, could be a bit more substantial. That was one of the first things I noticed when going through it. And the other one we're going to talk about is those consolidation areas. I feel he could have avoided a ton of losses if he, kind of laid off on the aggression, was willing to sit out of those consolidation periods. I understand when, you want to work mechanically, it's one of those things of just take every setup, take every setup. But if you are working in a sideways range, 9 out of 10 times, I feel you are taking unnecessary losses. That's my personal opinion, but I really, really try to avoid price action where it's just completely sideways. We're seeing barely any lows taken, barely any highs taken, kind of working within some ugly range. And there's obviously some worse pairs we looked at um, as well that are very similar, like something like this. As much as I can look at this and make something out of nothing and say, oh, well, this swept the high here, we broke structure down, so now I have a setup here. I can make something up. Fair value gap is there and everything. Here we go. Now take a sell. It works, but you got to realize you're just throwing yourself off completely. Looking at the grand scheme of things, I would never want to touch a pair that looks something like this until we see some more clear structure and clear volume in the markets. So let's take a look at some of these trades here. I guess I'll briefly brush through break evens. Only because these don't necessarily affect his data, so I don't think it's too important to dive into them. I think this is a solid setup regardless. So we have a great sweep on liquidity here, very aggressive break of structure of both of these highs, and then price works its way back in, makes a move, and then comes back to that break even level. It's a pretty solid setup. Same here. I don't see anything wrong with this one. Another great setup. Sweep on liquidity. He marked it out here. I would consider this high the more significant one. Break a structure down. Plenty of fair value gap. One here, and then price worked its way back up. Taps in, breaks even, and then we do run and tap break even again. This one here, I will say, is a bit awkward for me. I would not have taken this one. If price comes up very aggressively, works its way back down, and then makes another heavy bullish move like this, just about invalidating that high too, I'm out at that point. I would not want to hold a trade for too long if price continues to kind of consolidate, especially for, we're looking at maybe a month here from when the setup happened to when he actually got tapped in. This one's fairly ugly, but I still think a fine setup. We have tons of consolidation here with very low volume, and then price takes that area out. and then a very aggressive break of structure to the upside, fair value gap. So I think overall it's a good setup. It's just a bit ugly. Volume here does look kind of low and slow. Yeah, this one as well. I would say the same thing. This is very, very ugly volume for a break of structure. One of the main things, we do want to see for liquidity sweeps in breaks of structure is strong, high volume. And you can see the liquidity sweep here barely reached above that high. And then the break of structure was not very impulsive or strong at all. Price just kind of trickled its way down, barely broke, and then very aggressively went the other way. So if I did have to make an expectation here, I bet you price continued higher and even taking some more of this liquidity up here after that trade occurred. I want to make sure I'm not missing questions. And then let's see, any other setups that catch my eye? This one's a great one in my opinion. Nothing wrong with this. Very, very close to TP here. It happens. For some reason, I feel like I remember this one as well. Not sure if I was in this live or if I backtested it maybe. Can't remember. This one here is another example of one where I think the ranges are being a little bit forced here. In my honest opinion, I would be in this buy position right here. Let me grab this tool. We'll draw it out. I don't see any reason to hold trades for this long. We're looking at a break that happened way over here, and a sweep that happened way over here. If you focus on the most recent price, this is like a crystal clear setup in my opinion. We have a sweep on liquidity, break of structure. We have, I guess it's lacking fair value, so maybe that's why he didn't have it, but there is a fair value gap right here. And then obviously you could enter around that 75 level, and this to me I feel like would be a pretty solid winning trade to take if it does go and run that high. So that's something I would be focusing on a little bit more. You could even make an argument for a sweep of liquidity here, break of structure here, fair value gap here, and another winning trade right before that. So I do think focusing on that more recent price action and kind of what's happening now, not what happened then, because this is a very, very long term. You're looking at, by the time structure broke here, late June to the time you got tapped in is like, or sorry, late May to late June, almost a month for just it to tap in. And then not only that, but from the sweep of liquidity here to the low that broke, we're looking even longer of a span. I don't like to do that. I focus on that most recent price action in the most recent range that I'm seeing, which your little indicator even has here, where you can see these highs and lows that your indicator has in place. I would definitely have been in this buy position here. This is like one of the really nice ones. When I see something like this, I love taking setups like that. So I do think focusing on more recent price action could help big time. Let's see what else we got here. This is a great one. Nothing wrong with this. The break was a little weak here, but I do like the liquidity sweep, break of structure, fair value gap, tapped in, break even for him. Weak liquidity sweep. I would kind of agree in this case. Sweep is a bit weak. There's not really much liquidity here that got taken. I think if you want to take continuation type trades, this is perfectly fine. Some people on the server would even be willing to take a trade like this. They don't need that aggressive liquidity sweep. This is another very, very large range, which isn't a bad thing. But once again, I do think if I were to have this set up, it would look more something along the lines of a sweep on liquidity, a break of structure, taking a trade from this high to this low. I would have been tapped in roughly at this level, and then also already risk-free on it if it runs 3R or if it breaks even. Either one is fine, but I do think focusing on that more recent price action, zooming too far out and taking these huge, huge ranges, although it is fine, I do think I find more profitability using some smaller ranges like this. Most recent price, that's the way I put it. The most recent range that follows all of your rules. That's kind of what I tend to look for. This is going to be another example of that. I would definitely not involve in something like this, only because first off, the consolidation here is just absolutely absurd. You're looking at 2 months for this trade to just sit and consolidate, which I get it. Once you're in, it's not up to you what price did after that, but I think part of it comes down to how long term If I saw this breakup structure occur and I had the order set, it's fine. But if I see this type of price action low and slow for, you're looking at already a month between when the low is put in place to when you get tapped in, very low, very slow volume. This just looks like a headache to me overall, realistically. And then if you do, once again, go back to my example of the most recent price action, I wouldn't even enter any of this. So we'll exit out for now, but I'm just showing you an example of, once again, this long, low, and slow range is happening. I would delete my order. If I see something like this, then come and set up. I think it's fine to take. But then obviously, once again, you would have hit TP in this case, but even then, it's like all of this extra price action here is just something that I would try my best to avoid if I see price working into some form of consolidation like this, not invalidating any highs or lows. This looks solid to me. I like the sweep. I like the break here. It's another good one. Definitely a little bit tough regarding structure here. There is, some inner structure and external structure kind of working within this area. We don't have any good invalidations of lows or highs, but I think it's a fine setup. Same with this one. Another good setup. The sweep is definitely a little odd here. Not much about this speaks very impulsive. I think this high that he has drawn here, if it took that, I would have been a lot more convinced in this setup. But there is no real liquidity sweep here, in my opinion. This one as well, it's fine, but I do think, this is another example where price is not only consolidating a bit, but you're kind of working too internal to the range. Oops, I lost it. I don't think this one here is bad. I'm a little just confused on it because of the consolidation. Okay, I see. So he entered here, not here. Yeah, this is definitely a bit of an uglier one, I can't lie, but I think a fine trade nonetheless. I just think kind of trying to avoid these very sideways price movements would be better off. Once again, it's a little bit similar in this case where price is definitely a bit sideways, but we have a good sweep here. The break is definitely weaker if you look at the overall low. I think using this one is fine though. So I think one of the biggest takeaways already just from looking at the break even section would be, obviously because break evens are unbiased, all of these net nothing on the account, but I think you can still learn a lot from them setup wise. I think number one is avoiding those consolidation areas is a big one here. Being able to look at price and quickly identify if it's something you want to trade or not. Similar to what we're looking at with Euro Chef, like I can very quickly look at this regardless of what's going on inside this range. I don't want anything to do with it. I don't think my capital is worth risking on something like that. And number two would definitely be the timing of these ranges. Stuff like this where price is just very low and slow. Let me find a better one because that one I can understand. Um, let's see here. This one here is a good example. When I see price kind of making new structural highs after retracing a bit and then coming to make a new high, I'm out of this original trade now. I don't want to hold it too long because if you do hold this pending order too long, that's when it gets turned into orders like this and you end up, a month later getting tapped in and then 2 months later ending up making nothing on that trade. Extremely frustrating psychologically even to try and deal with something like this. So I do avoid taking setups that are too far in the past. Um, Other than that, too, I think a little minor tweak on liquidity sweeps would be all right. Trying to focus a little bit more on the impulsive, strong liquidity sweeps versus, there was a good example in here if I could find it. Where am I? It's not this. Oh, this one here. So like focusing on a little bit better of liquidity sweeps in some cases as well. I don't think anything about this shows some very impulsive sweeps on liquidity, which is why price more likely than not is going to run and make its way towards these two highs after this setup occurred. Because when you really look at this and break it down from a liquidity standpoint and just think about it from major highs and major lows and how much liquidity they hold, no liquidity was taken at this high, no liquidity was taken at this high. The only place on this chart where a significant low or high was taken is going to be this right here. So when all of the liquidity at this significant low is taken, where's the rest of the liquidity in the market? It's going to be above these two highs. So price is going to grab that liquidity and then deliver to the next highest point of liquidity, which is going to be those two highs, and start targeting those orders as well. So I do think that's why liquidity sweeps are super important, is because if there is no liquidity sweep, you are the liquidity in most cases. So you will find yourself on the wrong side of the market there. So I'm going to briefly go through wins and losses here. He didn't have too many wins, but I think these are fine. Even this one, though, I would argue is a bit of a stretch regarding what I mentioned when holding orders too long. I think it's fine regardless. It's not as long as the other ones we saw. It's, maybe working within a month's time period here. It actually is a bit of a stretched out scale as well, so it's a little bit shorter than I thought. But not a bad winner there. Another solid one. Sweep on liquidity, break a structure, working within the high to the low. Very aggressive TP as well. This is a great one too. Very significant low in the market. So you even were able to spot this in your own testing, which I think is important. Getting a second opinion from me is obviously great as well if you'd like to leverage that. But one of the first things you mentioned in your notes here was all of my winners had super obvious liquidity sweeps. So me going back to the break even section, and maybe if we have some time to dive into the losses, that is something I noticed, especially when I went through the losses in my own time. Very, very clear and impulsive sweep on liquidity here. We have a consolidation period with equal lows. We grab it and then break. These very clear sweeps on liquidity is going to increase your win rate overall. Another very clear one here. Sorry, I keep yawning today. Another very clear one here, though. We have a sweep. This one doesn't have a very significant low or high that was taken, to be honest, but I see the range he's working with here from this low to this high. And then we tap in. Very large fair value gap here. Once again, extremely, extremely impulsive liquidity sweep. We have the highs that he marks here, relative equal highs again. Very aggressive and strong wick with a super strong break of structure down. So he has this high to this low. Another solid trade. Once again, great, great example of a strong liquidity sweep. This is, in my opinion, picture perfect, this type of setup. But we have a strong low in the markets here. Lower low, lower high, lower low, lower high. We grab that lower low with just a wick, and then we break very aggressively to the upside here, leaving fair value behind. So that's a great, great setup there, in my opinion. Same kind of idea here. We have consolidation. That strong wick is thrown up, grabbing all of these, relative triple equal highs that are formed here. Then a break of structure down. So another solid setup. Great example as well. These types of consolidation areas are great. So when there isn't a significant high or low in the market, if you guys refer back to your course, the course content, consolidation areas are the same, in my opinion. It's either a strong lower high has to be taken or some form of consolidation. This is clearly consolidation, very aggressively grabbed through it, bunch of equal lows resting in here, and then very strong break of structure higher. So the winners to me look fantastic overall. We're seeing the same thing, very strong sweeps, very clear. Same with this one as well. Same with all of these setups, very strong and clear liquidity sweeps. And I did go through these losses on my own time here. We're kind of running out of time in the webinar to kind of go through because there is going to be a lot of them. But once again, the few main takeaways, I'll go over those before we wrap it up here. And if you guys want, throw any questions in chat that I can go over before we wrap it up too. But avoiding price action like this, where you have your order break of structure on May 8th here, and you're not even tapped into this order until the 29th of the month. These very slow and long drawn out ranges where you're looking all the way to the left for a setup, I just don't find very good win rate with these. And I also feel they're frustrating from a psychological standpoint. Another thing was consolidation periods was a big one. Trying to find an example of a trade. Where did he? Right here. I didn't see this. Yeah. So this is a great example of the weak liquidity sweeps. I guess I'll touch on that one while I have this trade open. But we got to look at liquidity from a support and resistance standpoint as well, and understand that most traders are looking at the markets from a support and resistance view, and that very strong highs or lows in the market, a very shallow and barely wick coming above this high does not mean that liquidity was grabbed here. In more cases than not, you're looking at equal highs or relative equal highs, and a lot of people are going to be selling this level. And when a lot of people are selling at one level, we know that there's a lot of buy orders to go right through that area. So that's what we're seeing here. Definitely focusing on stronger liquidity sweeps like the ones in your winning section would have narrowed down a lot of these setups. And then the other thing I was seeing a lot of, let me see if I can find this one is a good example, but trying to avoid like price that's just very sideways like this. We're almost making, if you took an average of this price action, it would be a straight line right through this. There's almost no trend in the market, bullish or bearish here. I think avoiding these is a big one that I saw as well. So I don't even think the issue here was necessarily missing too many winners. I did, of course, go through break evens and saw probably 2 to 3 winners that could have been taken if you just focused on more recent price. Like this one, for example, sweep on liquidity, break, fair value, and then 3 risk to reward if it runs TP. So there was some winners to be taken. I do feel like a little bit more, but the main thing I'm noticing here is these losses could significantly be cut down if you tried to focus a little bit more on avoiding sideways ranges. And if there is a sideways range, applying a bias to it could help if you really want to take setups like these. But you're using a super external point here for your liquidity sweep, but then you're using a tiny little internal low here to call it a break of structure. This type of scenario is what's going to get you put on the wrong side of the market, and it's most likely going to happen when you're working with sideways price action. If you look at Sven's video of external and internal structure, we have the major high here, the major low here. So using a liquidity sweep at a major high, but then using an internal low to call it a break of structure, you're going to end up on the wrong side of the market and take a lot of unnecessary losses. So that's about it for the review there. Just want to make sure there was no questions here. So that's going to be all. I'm about ready to wrap it up here. Let me know if there's anything else you guys want me to go over. Drink water real quick too. All right. That's going to be all then. I'll end it here. It'll be posted in about 15 minutes or so in the live sessions channel, and I will see you guys next week. Thank you all.